Yo, yo, how we doing, guys? Boom, we are live. How's it going? Right, I should have this up on YouTube now. Also, here on X, and there's a chat box that I don't know if it works or not. So if you're on YouTube, can you press or just type? Just say hi. It should also theoretically bring the X chat in, but apparently the API for that is pretty crap. So if you're on X, also say hi. Just say hi. Just say hi. Just let me know that you guys are here. Let me know we're all working, that the sound is going good, that you can see me, you can hear me. And then we'll crack on with this. I'm very sluggish today. My son was up at 4:30 to crack of dawn, and we didn't get to sleep. I don't think I got much sleep at all. I probably got about 2 hours max. It was so hot. Yeah. So it's been a bit of a tough day today. So let's see how we go through this stream, hey? If you're here, let me know. I said it's got 37 people here, apparently. This is on X. I don't know about YouTube. Otherwise, I'm just going to give it a couple of minutes and then I'm going to get going. But on the agenda tonight, might as well just start with this. On the agenda tonight, we're going to look at Bitcoin, Ethereum, and Solana in some more detail. I'm probably going to add Hyperliquid to this soon enough as well. Since everyone's trading that at the moment, it seems a bit silly to ignore it. Then I'm going to give my conditions for why I took a short trade on Bitcoin recently and just give you a little bit of insight and some technical knowledge as to why I took that. Then I have a section, the next section for that is about being patient for a trade win. I think one of the things that's affecting me at the moment is, as I spoke about in last week's stream, is moving to a swing trading style and having to wait a lot longer. So I think I need to go down a few time frames. I like the entries and I like the slowness of managing a higher time frame trade, but just waiting for it to play out is getting to me. But it's also a few other things are getting to me at the moment as well that feel like they're a bit stagnant, and you kind of have to keep your head in those moments. So we'll talk about that. And then the last section, a bit more of a trading, not psychology, but in terms of what you should be doing if you're struggling at the moment or if you're not recording enough information. So I'm going to talk about recording as much data as possible for your trading and what I did in order to build my confidence with it, and also to have this library of information that you can always reference in the future when things aren't going your way, so you've always got something to fall back onto. So no one's saying hi. It's kind of proved my point of feeling stagnant with everything at the moment. I think because the market is so dull. So I need to switch something up a bit perhaps, or we just need to drop this market. So let's go and talk about this on Bitcoin and what's happened today and what we can look at for the rest of the week. So I did mark these. I should just do H2 because we'll get a bit more information. I have marked these levels in this morning's video, and I am just going to run through it again very quickly. So this level here, we have to go all the way back to this point. Let's actually go on H4. This is the big low that pushes up and creates the all-time high. So if we bear that in mind, here on H2, we have a supply zone, and I've just marked the extreme of it because I like to keep my charts clean. We have a supply zone, drop, base, drop, where on the break of that level, it should have a fair amount of liquidity on a retest to drop us back down. But this is all part of a chain here. And the end of this chain is this decision point, which is where the decision was made to sell off and ultimately break this key level. So this is all a key area to look for shorts in. And you can see down here, we have 2 tests of that lower level and it doesn't break down. And then we have a decision point here where the buying took place to break above that level and put this high in. And then it should bounce, but it doesn't. And then similarly to what I was just saying, we have another chain like so. So the bottom of that chain is here, and then the top of that chain is here, and the top of that chain has not yet been tested. So we have also a lower low. Whoops, let's just mark it like this. We have a lower low, and it takes it out and then has retraced. So I don't know if this is a fake out before we get higher highs, or if this is a signal from the market that it's just taking out liquidity and then it's going to drop down. So what we can see here over the course of the weekend basically is a retrace, but it hasn't got very far. I know it's a bank holiday weekend, and I think it is in the UK, and I think it is also in America. So we're not getting a huge amount of activity. We're not getting a huge amount of movement today. So hopefully it will be a little bit better overnight tomorrow as well. So it's all just a lot of chop. It's a lot of indecision at the market at the moment. And then if I just mark this range here, which is formed on the break of this supply zone, this demand zone, we can see that it comes down, tries to push up a couple of times, breaks the range low, comes back up to the range high, bounces off the range low, and is now attempting to push up again. So I think if we end up coming down and breaking the low again, and this low especially with some strength, then we'll be good to continue to the downside, and then it should be targeting this level next, and then ultimately this one down here at 70.5k. However, if it starts holding the lows and starts closing back above it, we'll be looking for it to test 79.2. If it just pushes up from here, I wouldn't class that as too bullish, because we're coming straight into this key supply zone. So I think if it comes back up here, we have a key inflection point where if it starts reversing, then you've got another short opportunity, maybe a little bit tighter than previous shorts, especially my ones, for it to then drop down and head towards this level. So that'd be actually quite a nice level. The flip side of that is if it starts actually flipping that level and it looks bullish, creates higher highs, and then on the retest of it sends the market higher, then you could be looking up here for 84.5k for your target for longs. I don't really know what's going to happen. It's really difficult to decide at the moment because things are just going sideways. Very low volume, very compressed candles. So it's better just to kind of sit out until we get an increase in volume and we actually get a breakout of this range potentially to give us a signal of what it wants to do, and then look to position ourselves. Unless, of course, you're already in a position, then you're just going to have to, like I am, you're just going to have to wait for it to play out and wait for it to move. But at the moment, it's just like pulling teeth, this market, isn't it? I was live here last week and it's barely done anything since then. I need a new market to trade. So really, that's Bitcoin. There's not much to talk about. I think the first thing you should do when you get to a chart is look where we're coming from and look where we're going to. Well, we're coming from this supply, and the deepest level is down here for the demand. So it makes sense that this is a target. This is where we're coming from. This is where we're going to. And we're just kind of in the middle of it at the moment. So we need to see more price action. We need to see things develop, and we need to see just a bit of life in this market, right? It's making life extremely difficult as a content creator and as a trader because nothing's happening. There's nothing to talk about and nothing to trade. So very kind of hit and miss at the moment. It's a bit of a gamble. So that's why I think if you mark this range, you mark this supply, and you mark this demand, you'll have a better idea of what's going to happen once we get a breakout. Now, Ethereum on H4. So we had again, this really big end of chain level up here, and then it drops and sends us all the way down to the previous demand, which is a daily demand zone where the origin of this entire swing was built from, and it's come back down to it. And I think it's likely to get retested. But again, we're at a bit of a inflection point in the market because we have, let's just draw it. We have a downtrend here, and then price breaks up to test this momentum continuation level, lower low, then breaks out of the downtrend, builds a base, pushes up. On a retest of the base, it pushes up and breaks that level. And then we have, similarly, price pushes up, bounces off it multiple times and creates two higher highs from it. So we know there's liquidity at this point, and it's a strong level. On a break of it over here, we get a supply zone, and the end of that chain here after the impulse down is this decision point. So we have two levels to look at on Ethereum for a retrace. And then it's come back down to the origin of this move and bounced so far. So again, I don't know if this is a legitimate bounce to send us to higher places, or if it's just taking the liquidity out, ready to send us lower. It's difficult to decide at the moment, right? Because there's no volume pushing us down, there's no volume pushing us up. On the break of this demand, we have a range like this, and you can see, similar to Bitcoin, it ranges, tries to take the highs, takes the lows, but comes right back into the highs, breaks the lows, comes right back into the highs. So I think a couple of lower lows now would see a continuation of this trend. I'm not looking particularly bullish on this. I'm not looking like, it's not looking like there's a huge amount of strength to the upside. Look at the small candles. If I'm long, I'm not particularly confident in this pushing up at the moment. I think it's more likely it will break down. But we have a nice couple of levels here and here to look for reversals from. But I wouldn't start looking bullish because we have, again, this supply zone as well, which is sort of the origin of this entire swing down. Until that gets broken, that's what's holding us down. I wouldn't be looking to flip long. Until then, I'd still be looking reversals. I'd still be looking for any move up to be a retrace and to send us lower. So they're the levels that I'd mark. You've got the origin of this here on H2. You've got the continuation level. The continuation level has been taken out, and so has this origin level. So now just waiting for price to build for the next move, which is hopefully going to be this week. Normally with this sort of price action, you would expect quicker breakdowns, but we are at a pretty weird point in the market. So if it does break down, 1750 is the target for the lows, but I'd need to see clear movement now to the upside in order to be a little bit bullish. But it needs to take out levels and then hold these sorts of lows to do something like this in order for me to get a little bit bullish. So again, it's a bit of a gamble if you're not in anything at the moment. It's you really don't know which way it's going to break out because it's just reclaimed this range. But if it starts breaking out to the downside and creating new lows below, I'd say below that point, below where this point has gone, then I'd look to be continuing this to the downside. So looking bearish, basically. Now let's whiz through to Solana. And here we go on H4. So as I was saying this morning, we've got this big daily time frame range that we've been in since February, beginning of February. My God, nearly 4 months. I remember when we put this in, and I actually said, I wrote a tweet saying I think we'll have 2 months or so of ranging, but we've nearly got 4 months. This has been torture. This has actually been torture. And I can see why people feel like this is a bottom. It may be, but it's pretty difficult at the moment to trade and to call, right? So here we are on H4. We have, it takes out the highs, comes down to the mid-range, builds a base and pushes up to take out the high. And on the range high, we have this continuation level, which pushes up. And if it's bullish, that continuation level should bounce us to create a higher high. But it doesn't, it breaks. And then we have this as the continuation level to the downside. And we have this decision point where the sell-off took place to break that previous key level. And this was very nice because it comes down, puts the level in, drops, retests the level, and then puts a lower low. But now over the weekend, and today, it's retracing back up to that point, which makes me think it's going to come for the deeper liquidity level up here at about 89.23. So if we drop down to H2, that's essentially where I'd be looking for price to reverse. I'd be looking for that to hold. Maybe it comes up a little bit higher, but then eventually just to sell it back down, because I still think this is pretty bearish. If it breaks above and then creates higher highs, then I'll get bullish, and we'll look to this point here at about $105 for price to move up and put in a bullish trend. But I think personally it still looks pretty bearish, and I think next really, if there's a range, sort of a range here, where if we start breaking back down below that range, I'm pretty confident then that we'll get a short continuation to the downside, and we'd be looking for that previous range low as the target. Otherwise, I feel like it's going to come down here for 68 and then ultimately $52, which is what I've been talking about for nearly 4 months. Actually, it's been a bit longer than that. The bullish case, as I said, it wouldn't be until these levels are taken out, and I really don't want to see it move up, because if it moves up, it means we've got longer to range, and it means a lot more boredom and a lot more frustration. So ideally, I know if you're on the bull side, you don't really want to hear this, but ideally it just breaks down a lot sooner than later. So hopefully this week, but we have a pretty nice sort of range, a couple of good levels at higher time frame inflection points. We just need the volume, we just need the direction, and we just need a signal from the market about what it wants to do. So we're just going to have to wait for that. But personally, I still think retraces, moves up, are for looking for shorts. So yeah, any questions on that? Otherwise, I'm going to move to the next section, which is why I took my short on Bitcoin recently. Ahmed, market looks like it will rip up soon. Why not look only for longs? I mean, imagine the current high range is from 60K to 128K. So at 77K, it seems like a good discount. Yeah, it is a pretty good level. To be honest, it's what, about 35-40% down from the highs, 40% down from the highs, the all-time high. It makes sense to buy down here, sure, but I'm just waiting for a cleaner market structure break, because these are the two levels here for me which are holding everything down. We faked the first one and then have made a lower low. If it starts making higher highs here and then ultimately takes out this high and then this supply zone and then retraces, that's when I'll be looking to buy in pursuit of higher prices. But at the moment, we've not yet done that. We have bearish market structure, which is why I took a short. So it depends, what you're looking at for your time horizon. If you're looking to buy here and hold it for the next 4 years, then it's going to be a great buy, in my opinion. I think we're going to be over 200K in a few years. So you could probably like 3-4 extra money at this point. But I'm just waiting for the signs from the market to tell me. So this is why I took shorts recently. So we had this supply zone, which is where the thing is, when you're looking at supply and demand zones, you want to be not necessarily just taking trades at them blindly, but you want to read things like how the approach is, what sort of pattern forms at that level, and then how price breaks out of that pattern. So at this point, I took a short because it kind of put in this double top and then broke down, uses the underside and rips. And I got caught with my pants down and then took a loss on that one. But then once it got between these two levels and entered fake out territory, and everyone got super bullish. There was a range here, which I have been talking about with my subscribers. Let's stick it on H4, and have been talking about for a few weeks now. But essentially what had happened was we had this decision point, price pushes up, creates the higher high, and then immediately breaks down to create a low, pushes up to create a high above the range, hits the low again, and then creates a lower high, lower low, lower high, lower low, and then in the context of the range, a lower high again, and then another lower low. And then obviously comes down and breaks the key support areas. So there are a couple of triggers that I had in this point. I've got two positions open with an average entry of about 80,476. So somewhere about here. So the first trigger for me was to get into, this candle was great. It was something I thought was going to follow through, but I got in about halfway down as I saw it developing on H1, I believe it was. And I really expected that then to go, because you've got the range here, 1, 2, 3, 4 pushes up, and then you've got a few lower lows in sequence as well. And then obviously you've got the big momentum there. And I had my stop above the high here. And then it retraces back up with a lot of strength. There was a bit of news. And then when it wicked the high, and then if I just bring this down to M30, because I took this a little bit lower. It wicked the high and then started creating a lower low. This sort of pattern here would go do, do, do. So I took another entry up here. So that all brought my average position to about 80.476. Now, it's done exactly what I wanted. It dropped, and it's dropped hard. But now it's doing what I didn't want to see, which is for it to lose momentum, lose volume, and then just go sideways and act in a sort of compressed manner as well, and breaking out of that compression. So I really just want to see it go as soon as possible, especially when you've made a top, because you want to see the momentum kick in as soon as possible, and you want to see the move catch everyone off guard. You want to see people who have entered long get liquidated quickly to fuel that move, and that's not happened so far. So I have some heebie-jeebies over it, but so far I'm still pretty confident that this is going to go down. We just haven't got the signs yet. But one of the things I wanted to talk about is a trailing stop strategy, and I've got this on my YouTube channel, Trader Matt, and I've got it on my X profile. If you search for it, just trailing stop method. It's about a 6-7 minute video. But essentially, the way that I trail my positions, my stop losses, let's say we have a range here, we've got an uptrend, and then we have a breakout, and then we test a level, and then we break out again. Now I've entered, and then every time it creates a higher high, I'm going to move my stop. Sorry, a second higher high. So in this point here, it has now got 1, 2 higher highs, 1, 2 higher lows. So I'm going to move my stop basically to my entry 2 higher lows away from where price currently is. And then when it makes another higher high, I'll move my stop again 2 higher lows below. And then every single time, basically, just keep trailing so that there's always 2 higher highs and 2 higher lows between my stop loss and where price is at the moment. That way, it can take out one of the lows and still be bullish, maybe react from the deeper level and then continue. In a downtrend, how that looks is, let's say we move like this, and then I've got my entry here. And then what I want to see is price move away, and then I want to see a couple of lower lows and a couple of lower highs, and then I can move my stop down, because again, I'd want that first high could still get taken out. I've drawn this badly. And then it could bounce off that second one and then continue. And then once it's again created new lows, I can start trailing my stop down like this, so that there are always two so that there are always two lower highs and two lower lows between my stop and where price is. And that's how I trail, and that's how I catch moves. And I've kind of noticed that you can tend to have a couple of levels between where price is and your entry. So on this time frame, we have lower high, lower low, lower high, lower low. So I can move my stop above there, and I've got my positions in profit, but I'm also logically giving the trade room to breathe, so that if it does come back up, as it's kind of doing so now, it can still have time to move to the downside. In this instance, even though that's the second lower high away from my position, this will make more sense if you watch that video. It's way cleaner from what I've done here. The end of the chain is here. So I don't really want to put my stop loss in the middle of a chain when we've got clear impulse away and then we've got that chain there. It makes more sense to go above this point, in my opinion, because I've seen it plenty of times come up to the end of the chain, take me out, and then reverse. So I've also give a little room for a little bit of a fake out or a wick of that level. So I've now moved my trailing stop. It was last week above this impulse candle at about minus 0.1 R. But I've just moved it down a little bit now, essentially to around about break even plus fees. So I won't lose too much. But that gives me, and this is a totally logical reason to do so, that gives room for this just to be playing out under this level and for this level to keep holding us down. But also, if it breaks the level and fakes it, I've given it a little bit of padding so that it can fake it and then drop. But also, if it starts pushing up and looking bullish, takes the level out, it will take my position out with basically no loss. And then I can reevaluate what happens after that, whether I want to look to get long to send it higher, or sometimes you have to swallow it, even though I've taken a logical move, and then maybe look for a continuation to the downside as it happens. So that's why I took that position. That's how I managed the position. And that's how I can just kind of sit here a little bit more chill and just wait for things to play out. But that trading stop method is a really good way for you to logically move your stop loss without listening to emotions and without reacting to quick retraces. If you know what levels are holding price down, if you know what levels are protecting your position, it makes sense to keep your stop either side of them. But then as the trend evolves, as things start moving away, you want to be able to give it as much room as possible to play out without taking you out, of course. But also you want to be able to get your exit as close to the end of that trend as possible. So if it moves up, your stop might be here, and then you get a couple of higher highs like this, and then you move your stop all the way up here. Your trend might be down like this. And then you get taken out under that second higher low. That could be the signal from the market that it's going to put a full retrace in, but you've caught as much of that trend as possible, and you're managing it without emotions, just completely logically. So it's a really good method, and it's a method I'm employing now. The best, like if you get your entries right, as I did here, not so much here, it should move away, which is why I do that double confirmation break, because once the range is broken out 2 or 3 times to one side in line with the trend, it should be going. And this instance it has, but now obviously it's arsing around and I'm not really sure what's going to happen. So instead of like trailing tighter or maybe taking profits here, the market hasn't told me that it's broken the market structure and actually it's going to retrace and go higher. It's given it room to just arse around and then maybe build to go down. So that's the method in which I do that. So yeah, any questions on that? Otherwise, I'm going to move on to the next section, which is about having patience for things to play out, which is a pertinent subject at the moment. So I'm just going to have a swig of water. I've got electrolytes in the water as well. I'm fasting. Again, I did a 62 or 63 hour fast last week, which went really well. I felt really good after that and have had a noticeable shift in body fat. And then the key for like maintaining that is to make sure you don't just eat a load of calories in the days after. So I just stuck to my normal diet, and yeah, the body fat is going down quite nicely. But this week I'm just doing, instead of a 60 odd hour, I'm just doing a 40 hour. So I last ate at about 7 p.m. yesterday. So I'm about 24 hours in. And then when I wake up, it'll be about 36. And I'll probably look to break the fast at about 10, 11 a.m. tomorrow because I want to get to the gym. So I want to have a little bit of strength as well. So not too late, but I'm making sure I'm keeping the electrolytes up because I don't want to suffer bad headaches. So if anyone's interested in doing them, hit me up. They are very good and provide a lot of mental clarity as well. Definitely noticed that on the second day. I would like to have done another one this week, but I don't want to lose a lot of strength and muscle mass by having too many big fasts. So I might give it another couple of weeks and then do another one. But yeah, so the next subject I want to talk about is having patience for things to play out. And there's a couple of things for me which I'm struggling with at the moment. The first one is the obvious one, which is the one in front of you, which is waiting for this move to play out. And there are a lot of things dependent on this move for me. It's not like a life changing thing, but it's one of those things where you add it's something that can just move me to the next level, basically. In both my trading accounts, because I've got quite a lot of size on, and also with my social media, right? Because I'm one of few voices that are bearish and have been consistently bearish since October, because the market structure is dictating that. And this is now getting to the point where it is looking bullish for a lot of people. It's taken out key highs. And I'm still bearish. I'm still looking at this as a faker. I'm still not looking at this as a bullish continuation sign. And because of that, my engagement's gone down. My subscribers are dropping. The people watching these streams are dropping as well. I've noticed that because I'm giving information which I think most of the market thinks I'm wrong. My argument there is that this is actually a really good example of listening to what the chart is saying, because there are key inflection points that have not yet been broken and flipped, and therefore the bearish market structure is still in place. So I'm sitting here day after day, week after week, not only first waiting for these positions to open, but this is like a month ago now. This is where I took that first short. This was the first sign that it broke down, and then it took weeks for it to stop me out, and then it took another week or so to give me the next entry, and then it's been a week where it's dropped, and then a week where it's kind of gone sideways. And in those weeks, I'm in I've been two positions, but I'm in like one overall trade. I'm short from a lot higher as well on all the coins, and things haven't yet hit my downside targets. And then I'm fighting the rest of the market's opinions that it's not a bull market, we're still in a bear market and things are going lower. So the longer it takes for me to potentially be correct, the more doubt comes into people's minds, the less people start engaging with me, the less people start um, coming on my streams, subscribing to my content, just like overall, you know, interactions with my content. And it's tough. It's tough because I put a lot of energy and I put a lot of time into it. And it takes away from other things in my personal life in order to do this because I have goals with it. So it needs a lot of patience. And the way to build that patience is, first of all, having a system that you trust, which I obviously do. And that took many years to build that trust and confidence in it. A lot of losses, a lot of data recording, which is going to be the next section, and filling your life with other things like hobbies and other interests. So at the moment, it is a bit of a difficult thing, and if you're maybe suffering with patience for your own goals with something, not necessarily maybe trading, but not necessarily trading, you're going to have to live your life day after day anyway. So it makes no real reason to fret about it, because if you trust it's going to come sooner or later, your results going to come either negative or positive, or favorable or not favorable. But then you get to have that information and make another plan to do something different. So for me at the moment, I'm just showing up every day, every week, as I normally do, waiting for things to go in my favor. And if I'm wrong, and if this is the start of a bull trend, then I have my invalidation points and I look to flip and get bullish and, ride the next wave. But that there isn't enough information for me yet to meaningfully make that decision to start buying. Just because the rest of the market seems to think that we're going to go up, I can't just like buy, like even what Ahmed said there. It seems like a good discount at this point. Yeah, it technically is, but for me, there's not enough buy triggers to do so. So it's just about showing up again, just like keep doing the hard work and eventually understanding that it'll get paid, that you'll get rewarded for it. And I've said in tweets, and I've said in other videos, if you've got 100 days of work, 99 days of those 100 are going to be grinding with no results, and nothing but persistence and nothing but hope and trust in what you're doing is going to pay off. And if you've got reference points from other parts of your life where you've had to struggle through something, those are the things where you can draw strength from them, because well, I've struggled in the past and I maintained my belief in something and I kept doing the work, I kept showing up and I was consistent with everything, and eventually I got my rewards. So I believe that's going to happen in the next thing. And that's really all it is. And that can be scaled out as well with trading in general. Like if you've been trading a few years and your goal is to be a full-time trader and make money consistently every single month so you can pay your bills and you can live a lifestyle where it's just trading, you don't have a boss, you can give up your job. That is a very long slog. And if you focus on the outcome constantly, and I do this as well, it's only going to serve to bring you unhappiness and frustration and stress, because you're like, I'm not at that point yet, so I don't want to like feel good about things until I'm at that point. But a lot of the beauty is in the journey as well. Even as something as small as a medium time frame trade, the beauty is like having to like these constant like fights in your head with the market, with other people, is an area for growth. Because the next time I get in a trade similar to this, I'll remember this trade and how frustrating it was and how I had to fight with the market sentiment, how everything was going wrong for me in terms of my social media engagement, which I'm obviously trying to build. I'll remember these times and I'll remember my conviction. I'll remember to stay on board rather than having to flip bias, flip positions, flip emotions. Because I'll tell you one thing, and I'm sure you probably know this, when you've closed out a trade and then changed your position and then your original trade works out and you're not on board because you flip-flopped, such a painful thing. And I've been through enough of that to know that if all the signs are there and I'm reading them correctly, I've just got to go with that. So yeah, there's a few things in my life which feel stagnant, which are feel like affecting my mood at the moment. Largely dependent on this market fucking moving, but hey, there we go. It's like I said, you just got to keep showing up, keep trying to tweak things, keep trying to improve. And I believe like a year from now, for example, I'll be looking back at this time thinking, oh yeah, it was a real fucking struggle then. But I kept showing up, I kept doing the work, and I get rewarded for it. If I look back to this time last year, I've nearly been streaming for a year every Monday, putting my videos up every Monday. And the way that it all looked and the way it was all going and the engagement back then was like nowhere near as good as it is now. But I know what I'm capable of. I know what I've experienced in the past with social media, and I know what my content is worth. It's just again, just having to go through it and keep showing up and trusting things, right? So yeah, I know that's been a bit of a slog getting through that section, but hopefully you've got a good message from it, and hopefully that it makes some sense. You can relate to it in some way. But the overall message from me is just to build patience with something. You have to occupy your brain in other places, have other things going on at the same time, rather than putting all your eggs in one basket and hoping for that to work out. Um, and just keep showing up every day, basically, and doing the right work. Right, swig of water, and then we'll get on to the last section, which is about recording as much data as possible with your trading. So I have no visual aid for this, but this section is about recording as much data as possible with your trading. And you may be having, you may have a trade journal at the moment. You may analyze your account analytics. You may look at your previous few trades. You may be doing some work which you believe is correct for the amount of information you're building in order to improve your trading and improve your consistency. It will take more than what you're currently doing. Like I guarantee, whatever you're doing, you're not doing enough, which is the hard truth. And it's something that I had to realize myself many years ago. Because if you've got an Edgewonk journal, for example, or if you've got an Excel sheet and you're recording your trades, that's not enough to understand your edge. I keep saying you probably need, I say 1,000 reps, 1,000 live reps of your strategy in order to have a level of mastery with it. And you need to be recording every one of those trades. Not only the trades, you need to be recording all the information within those trades as well, so that you can remove the fear of the unknown. Now, the fear of the unknown is what causes people to FOMO into trades, what causes people to revenge trade, what causes people to close out early, to move their stop early, move to break even, enter too late and chase the trade, because you feel like you don't know what's going to happen next. So, and as a result of that, to overcompensate it, you make these emotional decisions which are not logical and which are not going to give you a favorable outcome. So there are certain things which I suffered with my edge, which I needed to record in greater detail. If anyone is interested, let me know afterwards. I'm not just going to bring it all up now because I don't know who's watching. There's not much engagement and stuff. But I recorded Excel sheets where I wanted to know how many times my entry was retested before my TP was hit, because I was moving my stop loss too early, too many times. And once I'd found over 100 trades, a sort of an average number of times my entry gets retested, I knew then not to move my stop too early and to let things breathe a little bit, and eventually ended up with this trailing stop method, which allowed me to let the trade breathe a little bit more, be able to book profits a little bit more consistently, and ultimately more profits than what I was getting before. Little things like that. Another thing was how long I had to wait between my signal, maybe like an alert for a level that got broken, how long I had to wait on average between that point and when I actually get an entry trigger and enter a trade. And it ended up being something like, on the 1 minute time frame, it ended up being something like 1 hour 40. Whereas I was doing that because of FOMO, because I'd get a signal from the market that it was going to drop, for example. I'd get into early, and then it might do all of this, and then it would drop. And I might have made a lot of bad decisions in this point because it wasn't dropping and it started retracing. It looked like it was going to take my stop out. I might close it in drawdown, for example. So that was another thing, like having to record that again over hundreds of trades. I got that information. I was recording information about it was like a measured move, like dependent on how big the range was. Can I still get 2.5R out of this range, or do I have to do it based more on points, or like, what was the other thing? Or just like to the next supply or demand zone. So a lot of information. I would jump on the back tester. Every single win that I got on the back tester, took screenshots of that, and I've got it in a folder so that I can review them. Because if you have, let's say, for example, here's my pattern, here's my edge, right? I wait for a range to form. If I'm in an uptrend, I'll wait for it to break once as a signal, come back and test the range, and then on another breakout, I look to get long. And I want to know how this looks in as many different ways as possible. Sometimes it's really textbook, sometimes it looks really scrappy, but the more screenshots that I've got, I'm able to see and build reference points in my mind, like, oh, it looked pretty shit at this point, but it still gave the entry trigger and the entry signal correctly. And then I know what to look out for next time, rather than just like the A+ textbook example. So that's another really key thing. But you have to review these things as well. You have to go through them periodically and see what you're doing, rather than just recording them and forgetting about them, because it's not really sinking in then. But if you go through screenshots of your live trades, of your back testing trades as well, even though it's a demo, even though it doesn't mean anything, it's on a back tester, it's still real information and real data that you're trading on the back tester. So they're real examples that are going to show up in that particular market. So it's all relevant. And it's an easy way to get reps. It's an easy way to build these things in your mind. And it's an easy way to trade and play them and understand all like the little nuances without affecting your actual trading account, which would affect your mood, and which will affect like your emotions, which would affect your actual trading performance and consistency, and then just like kind of ends up going through all of that over and over again. So whatever you're doing probably isn't enough, particularly if you're finding that you're not consistent at the moment, or you've not been consistent for a while, or you've never experienced like 3 to 6 months worth of consistency. You're not doing enough. So what you need to do is record as much data as possible, figure out where you have your fears, where you've got bad behaviors as a result of emotions, and those emotions will be based on fear, what you're fearful of, and then working out the data that you need in order to remove that fear, in order to be able to trade properly. Does that make sense? I'm going to end it there because that was quite a good point to end on. Thank you so much for anyone who is here. I'm not really sure. I don't know why the engagement has dropped so much. I can only guess that the market's really crap. We're going into summer. It's bank holiday today. But like I've been saying, just going to keep showing up, keep talking about what I see, taking the trades that I'm seeing as well, and then hopefully in time get the rewards for my work. And hopefully that'll be a lesson to you as well. So on Wednesday, I have Sailor Man Crypto. I have Popeye coming on stream. We're going to have a nice chat. He's a price action trader. He has a very strong accent, so that's going to be interesting for viewers. Anything else? No, that's about it. Thank you very much. Hope you have a good trading week ahead. Hope you've agreed with some of this stuff and that it helps you. And I will speak to you guys next time. Okay.